Thank you for joining today's discussion with Tom Sosnoff, who is the CEO of tastytrade and one of the largest brokerage firms in the US. Tom, it would be great today to unpack the tastytrade crypto ETF product, which is obviously powered by Zero Hash, the Bitcoin ETF, as well as upcoming events. And finally, I think one of the newer topics that we've discussed recently is potential use cases of crypto as a technology versus investment product for brokerage platforms. So Tom, we've been working together since 2020. Can you share just a couple of thoughts around the tastytrade's crypto product, how it's evolved? Crypto years are like dog years. A lot changes. Can you share your thoughts on that?
Well, a lot changes for sure. Some of it is in our control, and some of it is obviously, maybe our hands are forced. But especially on the regulated, broker side in the U.S. But do you want to talk about the cash markets or?
Yeah, the spot product. So the spot product that today is today you offer both the spot and the ETF, but the spot product evolution since 2020.
We actually offer the spot, the ETF, and the futures products.
Yeah.
So we're agnostic or indifferent to product. But the spot products are important to us because the spot products are actually the spot crypto is the only spot market we actually offer. So for that reason alone, it's important. I also think it's important because the ecosystem that we're building around that spot product, which is a crypto wallet, which is the technology to ultimately support tokenization, whatever that means, is really important to us. And to have that all in place when very few, I can only think of one other firm that's even close to having that stuff in place. So to have that entire ecosystem, ready to go and to expand as soon as, we have the opportunity to, I think that's really the key for us is to constantly be thinking, we're like a pool player. We're thinking 2 or 3 steps ahead.
And then in terms of those 2 or 3 steps ahead, obviously the Bitcoin ETF led to a lot of inflows into the space and obviously some outflows as well. What do you think it means for individual traders? Obviously, there was an impact on price for, I'd say, the longer tail of assets, ETH. Obviously, the optimism that the Bitcoin ETF will drive, for example, the ETH ETF. What do you think it means for the individual traders that obviously use Tasty and other platforms and individual customers?
Well, for the industry as a whole, I think it meant there was obviously this immediate validation of kind of the asset class, which I think is important because there was a lot of hurdles they had to go through to get these approved, and I think it's a great first step. I think from a trader perspective, there was also a realization that this was a great example of buy the rumor, sell the news from a price standpoint. So it wasn't free money like everybody thought, and it was kind of a masters of the obvious play. I think that the important thing about the Bitcoin ETF and what may ultimately be a series of a lot more ETFs is you'll obviously see survival of where there's the deepest liquidity. The other names won't survive, but for us from a trader perspective, it's all about the fastest route to a derivatives marketplace, because in an option marketplace, the futures right now they're relatively liquid, but the options on futures are not. And we need a listed option marketplace that is essentially under the SEC side of the business. And I think that's super important for us because it will bring a lot of people into the world of digital assets that have never touched them before. And ultimately, as you expand on the listed marketplace, a lot of that either flow, overflow, or just correlated business will find its way into the spot marketplace. So there will be a lot more of I'll buy something in the spot marketplace and I'll sell listed options against it, even though there won't be immediate, buying power relief. I think there'll be a lot more of, for example, a lot of people are going to be holding in both their accounts like a Tasty or in their digital wallets, they're going to be holding cash. They'll be holding cash crypto. And right now, there's nothing you can do against it. I mean, there's no way to reduce basis. And I think for people that are used to trading and are long stocks, and are used to reducing basis on long stocks by selling calls, or for people that are used to acquiring by selling puts. It just, again, reducing basis. I think that opportunity is going to present itself as soon as we have an option marketplace, and that will attract a lot more players into the space. There'll be a lot of people that get long Bitcoin either in the ETF market or in the cash market by selling puts initially, and there'll be a lot of people that already have positions that just want to write calls against it, and ultimately, that'll be a way that they either add income or reduce basis.
Yeah, I think one of the things that we definitely saw, just pinpointing one point, was about credibility of the space. I think it definitely evolved some of the discussions that we've been having, and we've seen groups that have, for example, been cautious of entering the space now saying, hey, we're interested in a Bitcoin spot product only. If you look at the success, for example, of Cash App and the amount of volume that they've done and the drive there. But I think Cash App is interesting as well because it touches upon the point of what is the overlap between ETF and spot traders. I think that's an interesting question, which I think, let's see a couple months data, and potentially that's something that we can do together. But I think equally as important is the spot product. The utility of this asset class has to continue to evolve, and that will drive a lot of the spot volume. And that's where I think Cash App has been particularly a big proponent as they've introduced things like Lightning and other things as to real use cases. And that will always be something that will be completely separate from the ETF. If you actually want to use Bitcoin as a transfer mechanism, you can't just hold it in an ETF. I think that would be an interesting evolution.
No question. But also, when you think about products, when you think about asset classes, it is very difficult for an asset class to go from, let's say, a $1 trillion marketplace to a $5 trillion marketplace, or you need to see some sizable jump over X number of years. And it's very difficult for that to happen unless you have institutional participation. And in the cash markets alone, based on the structure of most institutional funds, you really can't go directly into the cash markets. You need some form of listed marketplace. And so I think what we're looking forward to is leverage, which doesn't currently exist, the derivative space, which and also the institutional participation, which for no other reason just brings way more people into the pool. And that's what we want. And in order for the asset class to go from $1 trillion to 3 or 5 trillion, you're going to need that participation.
I think the leverage point is always an interesting one. It's almost like a fun geeky fact that it's because effectively the CFTC had an enforcement action where it was settled for $75,000 almost 7 or 8 years ago now, where they argued that it was a retail leverage transaction. And I think that gets into the nuance of what is physical settlement for an asset like Bitcoin, which is kind of interesting. Maybe looking forward, I mean, obviously we've got a lot coming up. If you look at Bitcoin halving and how it's impacted price over the last few iterations of Bitcoin halving, if you look at, for example, the rumored ETH ETF, what do you think that does for the space? Any
obviously I think it's the more the merrier. I mean, you need, in order to grow the space, you have to grow. It has to be inclusive of way more than just one cryptocurrency. So I think that's really important. I also think the more things that happen inside the space, like the halving, or anything else like that, it is going to get people to learn about, what is this? How does this technology work? And I think that's part of the growth, of the long-term growth plan. You need to see that. You can't. It is very difficult to survive on, with two underlyings. Now you have. And one other thing we should point out, Bitcoin volatility has dropped down to whatever it is right now, 47, 48, which is no different than, NVIDIA or Tesla or anything like that. But those stocks have, a significant leverage, and the underlyings and the derivatives have significant leverage. They don't have that yet in the in digital assets and in that whole space. And we need to get that in order to drive participation, because you have to have capital efficiency. You can't have asset growth without capital efficiency of the underlying, and we don't have the capital efficiency piece yet. To get to the capital efficiency piece, you have to validate the underlying product, which is what's happening right now. You're going through a validation process.
Obviously, one of the things that we've spoken quite a lot about is, this is as a tradable asset, as an investment product. I think what's interesting is the evolution of crypto, whether that be Bitcoin, stable coins, whatever. for actual use case as a technology, as a product. And I think one of the things that we've spoken a little bit about is, for example, how can crypto and some of the benefits it brings be used for example, funding of accounts or payments. And I'm curious from your perspective, you have a global customer base. There's parts of the world that it's very expensive to move money. Can you talk to me a little bit about your kind of early thoughts on that?
The hurdle for us with respect to using Bitcoin, using any kind of digital asset, as far as moving money around, is just to get through the let's call it legacy security concerns, and a lot of the know your customer rules and everything else like that. Where did this money come from? That's the only negative. The positives are crazy, and they outweigh it. Like just the speed at which we can complete the transaction, literally in seconds, microseconds, if we wanted to, from anywhere in the world, any currency, literally any currency. So any currency, crazy speed, just the simplicity of it all. The ability to move it directly into a brokerage account, to essentially cut out all the international banks and all that red tape and the crazy amount of cost involved. Right now, essentially, an international customer to move funds from anywhere in the world, it requires currency conversion. It requires everybody raking off the top. So what does the customer end up paying in the end? Anywhere from, let's call it 60 basis points to 150 basis points. Yeah. That is very restrictive. And if you want to grow your pool of liquidity, which is kind of all your financial markets, and you want to grow that, you have to be able to provide a vehicle to fund that pool of liquidity. And people are not going to pay a surcharge at the gate, a toll of 1% of whatever assets they have. They're going to be very limited to what they send over. Digital assets and cryptocurrencies essentially eliminate that. They eliminate that hurdle. They will allow us to essentially, we can, and long term it can go both ways. It can be in and out. We trade any product. Any product can be tokenized anywhere. But for starters, it will allow us to fund accounts. It will allow us to move money around. It will allow us to be currency agnostic. It's pretty exciting if we can clear some of the regulatory hurdles.
That's it. That's one of the things that we're working very closely on, right? Which is around how you allow funding, where you fund your zero hash, effectively your zero hash wallet, and then you convert it immediately into dollars, and then that gets swept into the brokerage account because the brokerages don't want to hold crypto. And then I think one of the things that we're doing, I think on the regulatory side around comfort of effectively know that transaction.
That's the challenge.
I think a lot of it is around education, frankly, right? Like if you actually look at crypto today, there's a lot of rules around, for example, the travel rule, where you have to report where these transactions are going. There's a huge amount of on-chain analysis that needs to be done. There's other checks and balances that you can put into place. For example, if you send in from one address, you can only send back to that address. So I think it's largely an education game around the use of crypto. If you look at, for example, the recent chain analysis report that came out, they only found that 0.2% of the entire transactions on chain were used for illicit purposes. Now that is a non-zero sum, but I think a lot of the protections in place, it's really an education process now for groups like us to educate how you can ensure that this payment mechanism can be used with all the benefits that you outline in a way that is within the confines of what is permissible and risk tolerance.
I think that when you probably look at the numbers, they're not bad at all, but the optics of it, because of its short history, the optics are not that good. And from a regulatory side, they're always concerned with the optics. The numbers, of course, the technology is light years better today than it was, just a few years ago. And the companies that you're talking about are legitimate companies versus some of the companies we had before. So it's a very different animal today, but the optics of it are still, a little sketchy. I mean, the technology from our side is already built. Like we've built the technology. We can move out already. So you can go from Tasty to a wallet, from Tasty to anywhere else, but taking it in is the challenge. Once we figure that out, it solves for us what's what's a royal global pain in the butt,
Yeah.
and it allows us to really expand our business. That is the most exciting piece to this,
Yeah.
because just the crypto piece of the business is too small. It needs to be bigger.
Yeah.
There needs to be this, like I talked about, there needs to be this complete ecosystem where we can get people that actually the money doesn't go in and just die there. We want the money to go. We want the money to go into digital assets and then trade.
Yep.
So whether it's swaps, whether it's derivatives, whether it's just buys and sells, whatever it is, we want the money to trade. Every firm's a trading firm.
Yeah.
We don't want it to just go in there and just sit there as a passive long.
Yeah, I think on that point, I think sometimes we talk about crypto as being a network of networks on the global piece. It allows
you guys do. Yeah.
We do.
Yeah.
We talk about it as it's effectively a means of transfer of value that anyone in the world can leverage
Right.
Quickly.
Right.
But yeah, I also think
But we think about it as a trader.
yes,
Yeah,
yes.
it's very different. The firms that use zero hash think about the trading side.
Yeah.
And zero hash's role is a little different.
And I think that's what's interesting, right? Because today you can buy spot Bitcoin on Tasty with zero
Yeah.
hash, and I think the difference is in talking about size of market is if you can leverage crypto as a payment mechanism with the benefits that you mentioned, quicker, cheaper.
Yeah.
It's actually a payment rail for the entire financial landscape. It's not just fund with Bitcoin, sell Bitcoin. It's fund your account with Bitcoin, automatically converted into dollars, and then you can do whatever else you want with it. So I think it's that difference of just viewing it purely as a tradable asset to a potentially as a payment mechanism to fund your brokerage account.
We are on the same page.
Yeah.
We agree.
Yeah.
And it just gives us, we like to say it gives us optionality, because it really does, and it gives us, it opens up so many more marketplaces for us, so many more underlyings,
Yeah.
and potentially, what are we always looking for? We're looking for different, asset classes to grow into, different markets to grow into. That's what this does for us.
Yeah. I think obviously opportunity moves some people. I think necessity moves others. One of the things we haven't actually spoken too much about is the move towards T+1 settlement. And I think it was interesting. So BNY Mellon put out that I think it's almost a third of all trades will struggle with the new T+1 settlement cycle. And what's been interesting for us is some groups have approached us, very, very large groups, that have said, hey, we are in Mexico, or we are one of the larger brokerages in South Korea, to move dollars to our US brokerage firm in the 24/7 market that they now offer. They have to do recon post the settlement period. They have to go through 4 or 5 hops. They actually cannot move money quickly enough, and they're actually
that was the whole thing. A poor customer in Singapore wants to trade in the U.S. We're like, okay, wait a week.
Yeah.
Because we don't deal with the institutions, just customers. But yeah, that's the challenge. We can change a week to an hour.
Yeah, I think that's a good place to end. Thank you very much, Tom.